author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to the Trader's Edge. I'm your host, Steve Rhodes. Thanks so much for joining me. Folks, I absolutely love being here with you, and it is terrific Thursday. Hopefully you're off to a great start of your day. Not just a great start of your day, folks. Why live an ordinary life when you can live an extraordinary life, folks? Because you absolutely can. All you have to do is just make a decision to do it. Just a couple of extra letters. Extraordinary. Isn't that really the life that you want? We hope that it is. Thanks so much for joining us here at TFNN. You know, it is terrific Thursday. Today you've got the Money Master Show. Following this, and we go out to Santa Fe to Kate Stalter. Then we do is, let's see, what do we do on Thursdays? We go to Larry. That's right, we go to Larry Pesavento. So we go just up the road to Tucson, where we'll take a look at Larry will take a look at the Futures Hour. And then we come we stay on the West Coast on Thursdays. We go out to California to Ken Shreve and then come all the way back here for the Tom O'Brien Show from 4 to 6, folks. And, if we take a look at the futures market right now, just take a look at what's going on. You got the ES Mini. That's what I've got up on my screen. In fact, you want to, thank you to everybody that's listening to us on the radio. We absolutely love that. And you can always catch the archive of this show on Channel 9. And it's a beautiful thing. Why? Because I'm going to teach you something. I promise that I'm going to teach you something. That's really what it's all about. It's all about learning. It's all about being able to educate yourself. So go to the homepage, and you can watch us live. So if you're near your device, an iPad, maybe it's a Google device, whatever it might be, you can always take a look at us on your device, as long as it's not a RIM device, right? Not as long as it's not a Crackberry out there. And so you can watch that, folks, and watch it on TigerTV. Go to the homepage of TFNN.com. Click on TigerTV. You'll be able to see our charts live. You'll see exactly what it is that we're looking at. Right now, what I have up on the screen here is I do have the ES Mini. We're taking a look at the futures contract. So what we're looking at is it's making a 100% move. It's really coming up against a pretty strong resistance area. That price point at $13.62 right now. We'll see what the ES Mini is doing. I think all it's doing, folks, is it is a bull trap that is going on out there. We're going to take a look at why. Right now, if we take a look at the Dow futures, you got the Dow futures up about 60 points. Must be the celebration that there was only, there was 1,000 less people applying for unemployment or something this morning instead of 5,000. Doesn't sound to me like something to celebrate about. You got the ES Mini trading up 1150 right now. NASDAQ up 14. Russell 2,000 up 8 points in the pre-market. King dollar only back 7 ticks, trading out at 80.16. You got gold trading down just a bit this morning. It's trading out at $15.93, just down $1.50. You've got silver off 4 pennies at $29.20. Light sweet crude taking a break from its downward move. It's trading up 44 cents at 97.27. If we go take a look at what's going on around the world right now, you got the DAX. You got in Germany, they're having a little bit of a celebration there. I don't know what they're celebrating, but I guess maybe no quantitative easing. And 62.24 is what they are up there at, 65.37. We'll take a look at the DAX for sure, because that has rejected the March 6th area, I believe. The FTSE's up 19 points right now. The Nikkei was off last night by 35, down almost 0.4%. The Shanghai up 2 points, so you could water skied over in Hong Kong. And you had the I'm sorry, that was the Shanghai that was up 2 points, and the Hang Seng was down 103. That was down 0.5% last night. They're really celebrating over in Spain this morning. That index is up 255 points. That is up 3.7%. Our call-in number is 877-927-6648, and you know what I want to do, folks, because I think yesterday was a very important day in the marketplace, and I think that what we should do is we should just simply do the Dragnet edition for the next, that's right, and you gotta
Ladies and gentlemen.
You gotta love Al. And I can't recall in the Dragnet edition, was it Gannon who said just the facts, ma'am? or was it Joe Friday that said that? Maybe somebody in the den remembers, and they can help me out. When we take a look at just the facts here, what I'm going to start off with, there is this 6-month seasonal period. We've talked about it on the show, so we're going to first start there. It was Joe Friday. And first what we're going to do is we're going to start there. I'm going to blow this up on my screen here if I can. This might be as blown up as I can get. Okay, now we don't want to blow it up too much larger than that. So what we're going to take a look at here, folks, is the 6-month seasonal. Sell in May, go away, and come back maybe in the October time frame and start moving into the marketplace. And what we're taking a look at here on the screen is really the last quadrant, the May 2011 time frame. You can see if you sold in May, and you came back. In this case here, we know if you came back October 4th. That was the right time to come back into the marketplace. You can see how that worked. You can see how even the market moved down, tried to move back up into that resistance area, which was May, and then it totally gave it up in July. You can see here on the right-hand quadrant, or the middle quadrant, you will see the favorable success factor. If you came back in November 1st, and bought and held through this May 1st, that was the right move. Now, we're only 9 days. Now we're 10 days into the trading session here. But you can see how it has started off. You can see right from May 1st, the market has started to sell down, right? Okay. So now let's take a look at it like this. Let's take a look, and let's go down a little bit further. Now, what I'm actually doing is I'm pulling up my newsletter because I've got multiple systems here. At least I'm hoping. There we go. So now what we're doing here, I'm pulling up the newsletter, and, my newsletter's got like about 44 pages in it this morning. It's packed with information each and every day. And this year we're going back now, and we're going to take a look at here just for a few minutes. We're going to go all the way back to 2004, 2005, because you absolutely do want to be taking a look at this, folks. So take a look at in this case here, we're taking a look at the time period of May 2010 through April 2010. So look at the unfavorable period. That's on the left. The favorable period on the right. So there's the May through November 1st, November 1st through April 30th, if you will. And so you can see it worked the last time. I've got success written. And what we're going to focus on is really the left-hand side, because that's the May side, because I want you to take a look at that. You can see here in May 2010, as soon as you got there, the market started trading below, just like we're taking a look at what we've got right now. If you go down into the May 2009 time frame, that's this red line, if you can see it along the bottom here, the red line along the bottom, and what you're looking at is as May came in here, the unfavorable period failed, meaning that the market moved up. But you can see right off the bat, the market moved up and it came back and it tested that line, which ended up being support. If you go down to the next one, we're talking about May 2008. It's this red dotted line going across the top here. And so when you take a look at that, you can see how it just started really trading sideways a bit before it finally gave it up. And so you had success there. Pay attention, because what I want you to pay attention to here is especially how you start to come off in the month of May. Right? Because when we took a look at where we've come off, we know we've come off to the downside. So let's go to 2007. Let's take a look at 2007. In 2007, that's this red line here across the center. As you began May 1st, you can see the market was moving up. All that it did was it moved up and it came back, it tested it, and what you had was, this area here failed. But right from the get-go off of May, the market moved up. So now let's take a look at the following one. We're going back to May 2006, folks. In May 2006, here's your red line. Yeah, you opened up a little bit. You came back below it, and that acted as resistance, folks. Take a look at May 2005. May 2005. Look at this. Here's your red line across the bottom. The market immediately moved up, came back and tested it. Here, again, is May of 2004. That's the last one that I've got as we go into break here. Look how in May 2004 the market moved down. The market absolutely closed lower coming into October, folks. Our market right now, what our market has done, folks, it's closed lower as well. 877-927-6648. I believe we'll be right. Oh, I've got the wrong clock up. No wonder I'm not following along here. That helps. I've got the clock up for Tom's show. We've actually got 3 minutes left. Okay, cool. I was trying to rush things along. So good. I don't have to do that. Okay. So now let's take a look at, what I want you to understand here, and yes, you can say, hey, look, Steve, only going back to 2004, maybe that's not enough of a sample size, just going back 7 years. Well, folks, when you take a look at it, all I can do is like Joe Friday. All I can do is present you with the facts, and you make your own trading decisions. But as we take a look at right now, as we've come into this session here today, as we're coming into the month of May, what's happened here is the market has moved lower. So that's one element to take a look at. how about we go take a look at some other elements? And the other elements, I was pointing that out on Tom's show last night as we were coming into the open. And what I was taking a look at there, what I've done for my subscribers, was taking a look at hammer candles. In fact, I'm going to switch out of here right now, and then we'll come back to this set of charts here. And we're going to switch right over to the New York Stock Exchange as soon as I can find that index here on my screen. And what we're going to take a look at, that's what we've got up here right now. And what happened, not yesterday, but 2 trading sessions ago, it put in a hammer candle. And you know how I love my hammer candles, folks. Why? Because they give you a ton of information about the emotion in the market. And that's what trading is really all about. It is all about emotion. You absolutely need to understand your own emotion, because that's what's really going on in the marketplace. When you take a look at the emotion between the bulls and the bears, when you get a hammer candle, especially as the market is moving down, what happens here, folks, is the bears have pushed it down during that trading session. The bulls stepped in, and they stepped in certainly either intraday or towards the end of the session and pushed it all back up. Well, when you go back and you take a look at the New York Stock Exchange, when you take a look at those hammer candles, and you don't get a close above it the following session, it spells bad things. Now, you did complete a 1-to-1 A to B equals C to D, or close enough to it, in the New York Stock Exchange. So when you do that, and I don't think that ABC is over, folks, when you do that, in fact, that's what I teach folks in my Master Trader course. It's coming up next Friday. You expect a little bit of a bounce. It's just like making a move of a move. That's exactly what the ES Mini has done here. That's exactly what King Dollar did. Let's take a look at King Dollar here real quickly. King Dollar yesterday making a 100% move of a move. The high there is the April 6th area, 80.38. Yesterday, what did it get up to? It got up to a high of 80.42. All it's doing is backing off a little bit, but it's backing off with light volume. All that it's really doing, folks, is probably setting up the B to a C of a much larger A, B equals C, D up, folks. 877-927-6648. Actually, when we get back, we're going to go take a look at what's popping and what's dropping in the pre-market. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and it's going to be Game 7 in New York. Saturday night at 7:30, you had the Washington Capitals beat the New York Rangers 2-1 last night. A heck of a good game, and there is nothing like Game 7. I wish I were in New York on Sunday evening to watch that game. Instead, I'll just simply have to be planted in front of my lazy boy. Hopefully, I'll be able to stay up and watch the game. Absolutely should be a great game. Let's go take a look at the game in the marketplace right now. Let's go take a look at what's popping and what's dropping in the pre-market. So let's see, leading on the way up, percentage-wise, you've got the Maxon Pharmaceuticals, SOMX, they're up 15% this morning. I don't see why they're up, but they are up. You got Oxygene. How about that? OXIGENE. The actual ticker symbol is OXGN. They are up 15%. Of course, they close at $1. They're only up $1.15. Monster Beverage, MNST. They came out with some nice earnings yesterday. I think up about 38% or so. They're Q1 net sales, $454 million versus $356 million. They're up, 13% in the pre-market. They closed out at $63.51 last night, $65.31. They are trading at $73.88. You've got InfoSpace, INSP. They're up 14%. Closed out at $10.98. They're trading out at $12.59 right now. You've got Nina Paper, NP is the ticker symbol. They closed out at $27.15. They're trading out at $30. That was the last trade that fired off, although not a lot of trades, so I don't know how close that is to really being the right number. You got Beacon Roofing, BECN. They're up about 8%. They closed out at $25.89. They're trading out at $28.04. Their net income, $3.1 million versus a loss of $6.1 million last year. That's not too bad. Nice swing there, and the market is paying that off well. Live Nation, LYV. Live Nation, folks, they are trading up about 6%. They closed out at $8.31. They are trading out at $8.80. Their Q1 revenue, $868 million versus $849. They had a loss of $69 million versus a loss of $48 million. Okay, so they must be. What is it that they are that everybody's so happy about there? Okay. Well, the market likes it. Nothing for me to get that happy about. Quantum Corp, QTM. That's a low-price stock. Closed out at $214, trading out right now at $226. That's really what it is. Let's see what else might be popping here in the market. You got Sony. Sony's up 2.5%. SNE is the ticker symbol. They closed out at $15.23. They are trading out at $15.61. They had some pretty nice volume in the stock. If it wasn't yesterday, it might have been the day before. I do believe the Nikkei's got further to pull back, just as the yen does. I think it's a little too early to bite on Sony. I would be patient there. You've got their revenue. Let's see, what do they forecast here? Net income, 30 billion yen. So you have to do the math on that. Their net Q4 net loss attributable to stockholders, yen improvement, too much information there for me. Anyway, Sony is trading up this morning. Let's see, what do we have on the downside? Let's go take a look at what's on the downside. Right now, you've got Clean Diesel Technology. How about, that's a $3 stock. They're trading down 14%. Let's go take a look at Panel Universal, or Universal Display. PANL is the ticker symbol. They closed out at 39.16. They're trading down 34.48 in the pre-market. That's down 12%. You've got Cisco having a impact on the NASDAQ. Of course, NASDAQ futures are up this morning. Cisco closed out at 18.78. They are just trading right now at 17.22. That's a big move. That is a big move when you take a look at market cap-wise. What type of market cap, in essence, was lost when you take a look at what they're trading out at now versus what they closed at last night. I believe when Tom was pulling it up, there were somewhere around 5 billion shares out there. You take that 5 billion difference between, 1878, 1718, $1.50. That is a lot of market cap. You've got Eagle Bulk Shippers, EGLE. They close out at 120. They're trading out at 115 right now. Net loss is $17 million versus $5.8 a year ago. Revenues of $52 million versus $86. We know that the bulk shippers are having trouble, but they have been pulling back on some light volume. Be important to take a look at how Eagle, EGLE, trades this morning. You've got, let's see, what else maybe to the downside before we go to break? Anything of significance out here? It's always significant. Priceline down about 2%, trading out at 704 right now. They were up, down, and all around, as Tom loves to say. Folks, we'll be right back. We'll go see how these markets are going to open. You can always give us a call, 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 62 points. The S&P's up 10, Composite up 12. Small caps lead the charge on the, well, you can see here, it's a tie between the small caps and the S&P. S&P ahead by a nose. Small caps up 5.5 points. That's up 0.7%. The S&P up 0.77%. Let's see, you've got Microsoft up 18 cents right now. Intel up 4. Google up $4.65. Cisco, though, down 8% this morning. They're down $1.59, trading out at 17.18. We'll take a look at the type of volume behind the Cisco move. Apple trading up $5 out at 5.74. Leading the charge on the way up, you have Monster Beverage. They're up 11%, $7 and change. Trading up, Apple right behind them. You got those guys at Tempur-Pedic. They were up yesterday as well. They're up another 6.5%. Tesla Motors, TSLA, they are trading up 12%. I guess they're going to be able to release their car a little bit sooner than later. You've got Magna International. That's up 6%. That's trading up $2.88. Up at 45.68. Amazon trading up this morning. They're trading up a full percentage point. Goldman Sachs up 1.7%. Fossil, don't go near that stock. Fossil, they are getting hammered, although this morning they're just simply popping a bit, just probably doing another B to a C of a large ABC down. They're trading up about 3% this morning, but do not get in front of that stock. Infospace, INSP, they're trading up 17% this morning. They're up, that's a nice percentage. Infospace, they are trading out at $12.92. Let's see what's behind here. Infospace net income is in the range of 5 to 6 million shares. Let's see, net income 28.5 million versus 7.4 million. No wonder they are trading up. Maybe we'll take a look at that. Visa up as well. Let's see on the downside price line. Dollar-wise, leading on the charge down $19.52. That's down about almost 2.7%. Panel, Universal Display, they're right behind them. They're down $3 in change. They're down 7%. Silicon Graphics, SGI, they're off $2 this morning. AMAG, Pharmaceuticals, that's actually the ticker symbol as well. AMAG, they're off 13% this morning. Quality Systems, QSII, they're down 6%. Cisco, as we talked about, they're down 8%. You've got NetApp, NTAP. They're off 3% this morning. Vertex Pharmaceuticals, VRTX. They're off about 1.8. Kohl's, KSS. They're trading down 1.8%. Let's go to our first caller up in New Hampshire. Let's go to Lou in New Hampshire. Lou, thanks for calling. Thanks for holding.
Yes. Could you look at WSM?
WSM. I absolutely can. That's Williams and Sonoma. And let's see here. Did you shop at Williams and Sonoma?
Yeah.
Do you? You know what they have there? I'm pretty sure it's there. You like desserts?
Yes, I do.
You do? Okay. How about a chocolate souffle?
Sounds great.
Okay. You know, my favorite chocolate souffle is Roy's Restaurant. If you ever get a chance, you should go to Roy's. Make sure that you save some room for their chocolate souffle. I believe at Williams and Sonoma. Almost pretty sure that what you can do is you can buy this little batch that they've got. You can almost use like a little scoop, you know, like an ice cream scoop, and
right.
Scoop it out, put it in one of those little souffle things, stick it in the oven, and like 20 minutes later, you've actually got some incredible chocolate souffle. I certainly recommend it. But let's go take a look at the chart here. Let's pull that up on the screen. WSM, tell me what you're doing. Because I could get carried away in talking about desserts, you know, for a long time.
Shorting at 39.
Shorting at 39. Okay. Hey, I like that. I like that move here. You had a little shooting star out there on April the 3rd, and you got confirmation of that the following day. Right now what you are running into is you're running into the candle from March the 8th. So you had some pretty good volume down there, 14 million shares. You know, as it tries to bust through there, it's going to need some more volume. So it looks like maybe what Williams and Sonoma might be doing here is setting up the B to a C of an ABC leg. Now, you chose the price point of, 39 even? That's what you're looking at?
39.
Yeah. So if we just, let's assume that maybe the market bounces here a little bit and gives us the opportunity to get into some real nice short positions, you know, at just a 0.618 retracement is 39.07, 39. What I would do is I watch the volume, you know, as you're starting to pull back here. And you're going to want to watch it as you're coming into the price point of 38.49. That's the May 4th area. It only had 1.8 million shares. You might get another shot at this as it gets back up to the low of 39.56. That is the May 3rd swing point. Also happens to be the 0.786 retracement. But this has volume to the downside, and it's, tested that yesterday. Didn't get all the way down to the bottom. You've got it in several places. You also have it on January the 12th, where it had a nice downdraft of 11 million shares. If I put this on a weekly here for you real quickly. So I think the $39 area that you've got is a good price target.
Mm-hmm.
Alrighty?
Very good. Could you look at TZA?
TZA. I absolutely can look at TZA. Are you in the IW? Are you in that short position?
No, I'm not. I'm not in it yet.
You're not in it. Okay. So let's first just start off by taking a look at the IWM. Let's go see what the IWM is doing. Hey, how'd that work? I just opened it up and boom, there it was there. Now, if we take a look at the IWM is inside the March 6th swing point. So if we take a look at that right now, the high of the March 6th swing point is actually 79.62, 80 million shares there. Now, the IWM has tested the bottom of the March 6th. The low there is 78.41, again, 80 million shares. Now, the first time it came down and it tested it, Lou, it came down and tested it on April the 10th with 101 million shares. And it set up, a new swing point low at 78.14. The market moves up on lighter volume. It comes back down, and it tries to test that area on April 23rd, where it makes one of Steve's hammer candles. And it came down with 62 million shares. Didn't get all the way down and test it. Now, what you have had happen during the last two trading sessions is you have had both the April 10th low, that 78.14, with 101 million shares. That was tested on the 8th. Was tested with 62 million shares. Not enough to bust it down, but it still closes back inside that March 6th candle. Then yesterday gets down there with 64 million shares, rejects it. So it doesn't have enough to bust it down. But until you clear the March 6th high, in my opinion, until you clear 74 79.62. All it's doing is just building some cause to complete an A to B equals CD down. Now, that A point on the IWM is the high of March 27th. That's at 84.66. The low is that we're going to take a look at. The B point is going to be the April 10th swing point. That's got that 101 million shares. That's 78.14. The C point that was made was May the 1st, when it got up to 82.97. Now, 1-to-1 A to B equals C to D takes you to 76.44. And if you go over a little bit further over to the left of the chart, what you will also see, and it's important to pay attention to, is October 27th. At October 27th, that is a high volume swing point. We know that the market got over that on lighter volume. You take a look at the IWM, you had 129 million shares. That is likely going to be the next place where you get a little bit of turbulence in this A to B equals CD down. And but once you clear that area, what that does is that sets up the IWM coming all the way back to November 25th as its next stop. So is your question where to get in on the TZA?
That's right.
Yeah. You know, what you're going to have to do is just pay a little bit of attention here. You know, you might be able to scale in on this thing. I think ideally what you'd look for on the IWM is a test of 79.62. You know, if you can get up above 79.62 and reject that and take a look at whatever's going on volume-wise during the day, maybe wait till the close, get it closed back below that. That might be the time to go ahead and jump on the TZA.
Excellent.
But you get traded off the IWM. If you just look at the TZA, it'll just it'll confuse you, in my opinion.
I see.
Okay.
Thank you very much.
You bet.
Excellent.
You bet. Thanks for calling. Have a great morning, Lou. Let's go to Dave in Boston. Dave, thanks for calling. Thanks for holding.
Morning, Steve. How you doing today?
I'm doing great. Yourself?
Fantastic. Hey, your newsletter was action-packed this morning.
Oh, wasn't it, though?
Hey, a question for you. I missed your webcast yesterday.
Yeah.
I'm still holding my long, which is okay. My question is on the ES Mini.
Yes.
This bounce, and I do agree. I think this is just going to be a bounce. Where do you think we can bounce to?
Well, if you take a look at that, you take a look at that perigee line on the ES Mini. You know, and the problem with apogee and perigee, Dave, is when it happens over a weekend, you don't know where to really put that line of demarcation. And originally I had it at the opening on Sunday night, and then as we got more information as I watched this trade, I switched that over to the close of Friday. So in my opinion, the close of Friday in the ES Mini, which is at 1362.25, is a real key point. And what the market did this morning, what the ES Mini did this morning, is it got right up into that area, and said, no chance. And not only did it do that, it did it with a shooting star at 920, and that shooting star was followed up with a close below, which suggested right then and there that was going to act as resistance and that we would start to see some lower prices. Now we know that the bulls are stepping in each time as the ES Mini gets into the 1350. What did I say this morning? Probably about 1344.
1340.
Yeah, the 1340 area. And we know that the bulls are stepping in there because each time the market gets down there, folks, if you go back and you take a look at 6:30 and 7 o'clock at night, you had a hammer candle. I got the 10-minute chart up. I should put the 30-minute chart up here. It's going to make it easier for me.
Would it be too aggressive if we have a failure here at 1362 to scale in a one-third position in a short?
No, I think it's okay to take a short position because what you want to do is you want to use at least a 5-point stop. So you're at 1359 right now. That would take you up to 1364 as your stop. And if you do get a close above 1362.25, then it can set up a little bit more of a run to the long side. But right now that 1362 is acting as a real nice resistance area.
Yeah, I hear you.
But you're really have to manage this trade intraday because each time it gets down into that 1340-ish area, the bulls, somebody on the bull side, step in and try and push it up.
Hey, either that or I'll just wait for your updates.
All right.
Have a good day.
Okay, thanks, man. I really do appreciate it.
Thank
you. You bet. Folks, the Dow up 55 points right now. S&P's up 8. And so speaking of the newsletter, let's just switch back over there because, this is the Dragnet edition today on Thursdays. think Dragnet used to be on Thursdays, didn't it, folks? Wasn't it on Thursday evenings? I don't know how many of you folks used to watch that show, but that was I liked it. I thought that was a great program. So, one of the things that and normally I don't share a lot of my newsletter stuff during the show. There's plenty of other things to talk about, and my clients, they pay good money for my newsletter, so I like to give them some information. But there are certain times in the market where, my responsibility to you, the listener, is a lot more global than just in fact, my clients. And that was really when we took a look at yesterday's hammer candle in the New York Stock Exchange, because you may not want to go short. You may not want to try to short the market like Dave in Boston or like Lou in New Hampshire, and they're taking a look at the TZA. But you absolutely do want to be able to protect your nest egg. And you've had a nice run. If you rode the market down all the way in 2009, you were afraid of opening your statements, and you rode the market all the way back up into May of either last year, May of this year. You've had one heck of a nice run. And what you really should do when we take a look at the opening segment, where we were looking at taking a look at the sell in May, go away, come back in October. Look, folks, you can get out of the market right now. You can go to cash. Being in King dollar is not really a bad thing. And if the market gets above the May 1st area, and it gets above with May 1st, with conviction, you will not be out a whole lot. I can guarantee you that your risk to the downside is substantially more now than than the benefit that you can get to the upside. And all the tendencies that we've got in a market where you've had such a good run, what you would expect is bulls to come into the market and, try to buy the dips. That's what Dave and I were really talking about when you take a look at that 1340 area on the ES Mini. You can watch the bulls when the price gets down into that range, step right in. But the bears, they're ready to step right in and say, no, I don't think we're going to let you. They're just taking a look at it as every opportunity. And what we should hope for, absolutely, is one heck of a nice bounce from here. We should hope for that if you're not yet on the bearish side of the market, because that would be a real nice gift. And a real nice gift would be an ABCD pattern, maybe a Gartley sell pattern. But folks, when you take a look at what I've got up on my screen here, which is the New York Stock Exchange, this one here goes back to a hammer candle. Now I'm going to just show you here are the hammer candles on the NYSE, where in the following trading session you had a close lower. And so, I'm not just showing you only the ones that work. I show you everything. And you can see here going back to August 2011, you had a close below. Market moved all the way down into October. How did that happen? Wasn't that sell in May? Come back in, the end of October, beginning of November. If you go back even further, you go back to the hammer candle that came down here in the 2010 time frame. Market didn't make a low until later on in June, late June, early July. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. You got the Dow up 83, S&P's up 11, Composite up 10, and right now you got the ES Mini trading. It keeps bumping up against that 1362 area and not getting through. Now, if you do take a look at A, B, C, D patterns that are out there, your first gift might be if the ES Mini trades up to that 1367 area. That would be the dead cat bounce all the way off of the May 1st highs down to lows that were put in yesterday morning at about 10:30. And now, what the real gift would be to get this thing up into the 0.618 retracement area, that would be the 1384. We know that 0.618 is a normal and natural level for markets to move, and that would be the greatest gift of all, would be for the ES Mini to get up into that 1384, setting up one heck of a nice Gartley sell pattern. In the theory of the chicken and the egg, which is that you think came first, the chicken or the egg? Well, have you ever said to yourself, so I'm just going to use that as my metaphor here. The next thing that I'll pose, have you ever said, or have you ever heard somebody say, if I had more money, I'd go ahead and have a better plan, or I'd make a better plan? Have you ever said that yourself, or do you know somebody that has said that? That's kind of like the chicken and the egg. Why? Because I would turn it around, because I would tell you that if you had a better plan, you would have more money. To me, that's really what it's all about. That's what I'm going to be doing next Friday, so a week from tomorrow, at the one-day live workshop. When I say live, it's going to be online, so it's going to be live online. It's a full-day trading session. We'll be focused on buying and selling the D point. I will show you what's really the tricks involved, but it doesn't matter what level of trading you're coming from, whether you're an expert or whether you are looking for a place to start. If you're looking for a place to start, what I can promise you is this is the place that you want to start. And the reason is that these patterns repeat over and over again. It's just like the tide. The tide goes out and the tide comes in. It's been doing it for 6,000 years. You know, after dark comes light. After a movement down, you have movements up. And there are these patterns that exist. There's emotions that are out there. You can learn how to understand these candles. I can teach that to you in one solid day. Plus, you've got my newsletter for 30 days. Plus, you've got access to me. I do a live webcast for my clients every other week. It then gets recorded. It's archived. So there's just simply a slew of education. So if you are trying to understand, you're trying to educate yourself on these marketplaces, and you're saying, you know what, I don't know if I want to spend the $500. You know, if I have more money, then I'll go create a better plan. To me, I would say, why don't you think about it like this? If you have a better plan, you'll be able to create more money. To me, that's really what it's all about. And there is no better plan than buying and selling the D point, letting the market give you 75% of the information. Why? Because, folks, I consider that to be an unfair advantage. And when you can have an unfair advantage, that is a beautiful thing to have. Let's go take a look at Monster Beverage out here. Let's go see. They're trading up $7.40 right now. If we take a look at Monster Beverage, MNST is the ticker symbol on that. Here we go. I've got the weekly chart trading out at 72.50 right now. Let's see here. Let's take a look at the daily chart, though. See what kind of juice is in it today. It is gapped up, and this could be setting up a island reversal here. So you can see you've got a nice gap up here. Trading, let's see, the high that it got to so far was 74.92, a low of 71.50. Volume in it so far today, you've got 1.6 million shares. Nothing compared to the rumor volume when you had 19 million shares on April the 30th. And that was the rumor that Coca-Cola was going to go ahead and buy them out. Folks, I have used to trade this stock all the time when it was underneath Hanson Natural, H-A-N-S. And this has a little bit of psycho-ness to it. Stay tuned, folks. Tom and I will be up next. Then we go out to Kate Stalter on Thursday, Larry Pesavento, then at 3 o'clock over to Ken Shreve and back here for the Tom O'Brien Show. Have a terrific Thursday, folks, and I'll see you in the morning. Bye-bye.